Hello and welcome to this latest Wealth of Advice market update that we're recording on 19th of February 2025. It's actually Jordan's birthday today, so he's away in the Lake District having a nice week's holiday, and he put together lots of the text and graphs etc. for this presentation before he left last week. The reason I'm saying this is we're living in one of these weird times in history where so much seems to be happening on a daily basis that whatever we type or put into these updates, they're immediately going to be out of date. As I say, today's main news from the UK has been that inflation has come in at a lot higher rate than was expected, at 3% rather than a target or expected rate of 2.5%. But if you look at the reasons and the causes for that, it was probably to be expected. So whilst the government is saying it's trying to get inflation under control, one of the key reasons why inflation was high today was because school fees have gone up. Well, why school fees gone up? Because they added VAT of 20% or whatever it may be to the cost of school fees. So a lot of these things are to be expected. Last week we had a negative story saying UK GDP was relatively flat, but we avoided a recession, which was good. But if inflation's running at 3% and 2.5%, it does show you that people are still able to spend money. Hopefully the economy's growing in the background and the UK economy will be okay for the time being. We have had a volatile period in markets across the world. January in the US was very positive, but then as we got to the end of January, there was a big sell-off in markets. Nvidia, which is one of the biggest companies in the world now, which makes those special microchips that go into iPhones and other devices, which apparently the envy of the world because they're so good and they're only going to get faster from here. Their shares fell by around about 17% in one day. They did recover within a day or so, and that was all on the back that the Chinese apparently had come up with another similar microchip which was being developed and much cheaper. But the huge other technology companies out there, Apple, Tesla, Google, they've seen a mass inflow of money which was maybe coming out of Nvidia. So overall markets have been positive in 2025 so far, and I'm not worried or wanting to convey any figures right now. Overall, February's been largely flat after such a big bounce, a good month of January. US inflation has remained also slightly above expectations, around about 2.9% was their figure that came out a few days ago. The Federal Reserve decided to keep their rate at 4.5%, and the expectation is that the US Fed will move their rates down at a slower rate than the UK, who are expected to reduce them more aggressively in 2025 because, again, the UK economy is a little bit flatter. Donald Trump, when I say things are moving so fast in the world and every day's news story seems to be changing, Donald Trump is clearly the main reason for this. He's coming out and he's saying things that most prime ministers and presidents and leaders of nations have never said before in history, and a lot of the time it is spooking the markets for a day or two, and then people realise a lot of these things he's saying are often threats, and then other sides maybe back down. The tariffs that he is proposing to impose on Mexico and Canada of around 25% have escalated trade tensions. He has delayed implementing those, so whilst the markets went down when we heard that these might happen, they then recovered because everyone's really worried about what the potential implications will be on global supply chains. The big news of this week is what Trump is doing with the Russians to try and end the war in Ukraine. This afternoon he's come out and called Vladimir Zelensky a dictator. He said he's had Biden wrapped around his fingers for the last 3 years. And that's a total different change in direction to what we heard since the war started in 2022, where right at the very beginning of it, Zelensky was brought on board as some kind of world hero who was going to save the world from Russia. So to hear Trump mention that this afternoon is quite a stark change. And what is going on now is, how is this whole rebuild of Ukraine going to happen if the war comes to an end? Where does Russia sit in this? China is obviously pleased that these discussions are going on. But Zelensky and Ukraine aren't happy at all. When we spoke with Admiral Lord West back in December, he was saying geopolitical tensions in the world should dissipate in 2025. And then, as I say, this week you've seen a few big news stories which might kind of contradict that. But hopefully everything starts to calm down and the world sort of moves on from this in a calmer place, and obviously markets go up. So as I said earlier, thankfully the UK didn't enter a recession. The technical definition of a recession is where we have 2 negative quarters of GDP growth. That didn't happen because we expanded by the very small amount of 0.1% in the final quarter of last year, but it does suggest when you look at the numbers that our overall economy is quite weak. But let's not forget, our economy in the European zone type of countries is doing very well. We're not in a recession. Germany's been in recession for a long time, so there is still positive things about our economy. Reducing interest rates right now should have an impact to see the economy grow maybe towards the end of the year, because it always takes a few months to kick in. We might have other discussions about some of the tax changes that the Labour Party are proposing to bring in. I personally think will have a negative impact growth in the future. We think 2025 should be largely okay. As I said, that's because interest rates have come down again. If you look at the chart on the screen right now, you can see if you go back to the heady days of pre-financial crash in 2007, when we had interest rates of 5.75%. They've come down to zero. They almost went negative after COVID. And then, as you can see, we had 18 consecutive interest rate rises as we came out of COVID, and we entered that what we often call an inflation bomb. So to combat inflation, interest rates rose quite rapidly. You never normally see interest rates go up as quick as that, but it does mirror how quickly they went down in the 2007-8 financial crash. But thankfully they're coming back down, and we're now at a UK interest rate of 4.5%. I've said on this update a few times in the past that 4% I think is a good long-term target to have. And if you look at 300 years of interest rate history, you will see that rates between 3 to 4% is the norm. I know a lot of people looking at this might be shouting at the screen, saying, I remember getting a mortgage in 1985 when interest rates were 15%. Well, that was unusual, just as the 0% interest rates that we saw over the last decade were also unusual. So let's get back to a normal rate of 3-4% on interest rates. Savers at the bank will be rewarded by a better rate of interest than what they had over that decade period. And let's hope that inflation can stay around about those target figures of between 2-3%. Bringing these interest rates down now hopefully makes the UK economy grow as the year moves on. So now we look at the market performance. 2025 has started very, very good all the way up to the end of January. Then we entered February. Markets were really negative when I was having client review meetings the first 2 weeks of February. There were some negative figures on all portfolios for the calendar month of February. But when we look at the year in isolation from the 1st of January 2025, FTSE 100 will have these short-term bursts where they do outperform other markets. So since the beginning of the year, it's up 7.83%. Compared to that, the MSCI World Index is up 4.6%. And the little S&P 500 at the bottom there, we should never call it that, 3.74% since the start of the year. Now when we look at that over 12 months, the S&P is doing fantastically well, racing ahead there, 23.46. But as you can see, the FTSE 100 has caught up to it nice since the turn of the year. So that's positive, because all of our client portfolios, no matter which allocation you're invested in, will be experiencing good growth figures over that 12-month period. And so much so when clients are coming in now and look at those 12-month performance figures, yes, they look good, but when we stretch it back to when this bounce really started, the 1st of November 2023, most portfolios, even the cautious ones or the balanced ones, they're up over 15% since November the 1st, 2023, and long may it continue. We're almost at that point now on the 5-year charts. You shouldn't wish your life away, but since I started looking at that COVID drop 5 years ago, I've often said I can't wait for that to disappear out the back end of it. So it is February the 19th today. If we record another one of these market updates at the end of March 2025, you can see that that COVID dip will have disappeared from the screen. I do think it is a good visual to leave on there to show for longer term investors. If you'd panicked at the bottom of that dip the day Boris Johnson called the lockdowns on March the 23rd, 2020, and you went into cash at that point, you would not have made as much money back. If you have the attitude of investment risk to be invested in these markets, you will be rewarded for holding out over the long term. And as I say, this graph shows that perfectly. The S&P 500 over that 5-year period is up 97.4%. FTSE 100 looks quite poor in comparison, but still over that 5-year period is up 40.06%. So as we keep saying to our clients, we will look after you in so much as what is your objectives, what is your attitude to risk, what do you need for your investment or pensions or savings portfolios in the future. We will not invest you into anything that is higher risk than what you're prepared to tolerate. It should be commensurate for what your overall objectives and risk appetites are. And then, as I said, the longer you are invested, the more you will be rewarded. So thanks again for listening to another Wealth of Advice market update. I managed to get through this one. People might have noticed my voice is a bit croaky. It's that time of year where there's various bugs and flus and what have you knocking about. So I hope you're all feeling well and good. If anyone does have any concerns or queries, please don't hesitate to get in touch. Thank you.